while since I could hold my head up high, and it's been a while since I first saw you. And it's been a while since I can stand on my own 2 feet again. And it's been a while since I could call you. And everything I can remember, as fucked up as it all may seem, the consequences that are rendered, I stretched myself beyond my means.
Hey, it's Soleil, and this is episode 510 of the Orange Pill Investor, and it is getting close. Getting a little stretched beyond my means, and my plan was that I could probably afford to peel off another 100 shares when we got to 250, but not really sure if I'll be willing to or have the means to continue to buy dips, which could be coming. We did hold on to 100K, so that's nice. But zooming out is copium at this point, right? So, I mean, I guess the daily is green, but week, month, 3 months, year to date, got to pretty much just zoom the fuck out to the 1 year chart to even get barely over a break even. And if I'm really, hugging myself and rocking myself for consolation, I can zoom out to the 5 and remind myself that that over over a 4 year cycle period, it's still up bigly. But I'm doing a little bit of a premature after action report, and a little bit annoyed with myself that I got sucked into the FOMO and got a little bit over my skis with the attack the tail. Like, there's a certain amount of leverage that makes sense for any account, and it's probably, I guess I got to do the not financial advice disclaimer, but it's probably not more than 10% of an entire portfolio. And just glancing at this, 40 contracts. I'm just going to round this to 500. Is that like 50? Yeah, 50 grand worth. So not the end of the world, but that's just this single position. So all of these positions are also leveraged. And let me just flip over to this one, because I don't think I even have, I don't even have positive theta in this account, which is pretty much the whole deal if you're an option seller. And so I reasoned with myself that as long as I'm using the profits from the short positions to add more long positions, worst case scenario is that these just all expire worthless and I end up with a break even with that strategy. But I also put myself on the clock with the 4 year cycle, which may or may not be true. So, I could end up closing all these positions if nothing happens by like March, and then we get the run up, which would kind of fall in line with the geopolitical situation in the US. Maybe they want to pump the market before the midterms or something. The rich and powerful people generally get what they want when they want it. They might have to crash the market to justify lowering, dumping rates even faster to get that to happen. So, just make sure you're ready for anything, I guess. But what I realized when I was looking at these positions, and I was like, holy shit, that's 50 grand, right? And already half of it is gone because the trade price was almost 5. It's trading below 2 now. So was that closer to 60% of this value has decayed over the 63 days that it's been open. And I opened a Poorman's covered call yesterday. Where is it? 2 of them. Yeah. So with 50 grand, I could actually open 5 of these damn things. And in general, on average, if every 2 weeks I roll this, you try to roll it for 50%. That's probably been a little bit overly optimistic, but at least by 3 weeks. So I would take this $900 and divide it by 4 for the optimistic number, which would be $220 a week per contract, or the pessimistic scenario would be dividing this by 6, which would be like 140 something a week per contract. But with the long calls and not selling anything against it, I just have to sit here and watch this decay when the price doesn't go in my direction. And even if it goes in my direction, it may not go up fast enough. Whereas if I had 50 grand worth of Poorman's covered calls, the longs will decay by this amount of theta, but the shorts are appreciating by this much. So at the very least, I could be earning like, if I did 5 of these, 5 times the 140, 500, yeah, $900 a week. If these positions were, instead of attacking the tail, it used to be the 1080s, but they don't even offer the 1080s anymore. The 910s are the new 1080s, apparently. But generating $900 a week, if I had these, if I had this position open for 63 days, 7 times 9 is 63. So 9 weeks times 900, 8 grand. So I would have made 8 grand off of this position. But of course, where is it? Let's just look at the 250s, because I did lose a bunch of money on these 250s. So each one of these lost, half their value? So at least the 8 grand would have at least compensated partially the leverage decay. But instead, I've just added leverage. I can't sell any covered calls against this, not materially. I looked at it the other day. I could probably sell this is 155 delta. I could probably sell 1 covered call against this position if I wanted to. But there was still, I think I still have it up. Yeah, there's still this dangerous, is this, never mind. This is me doing some research on Strive. My bad. There's, if I tried to sell a covered call against this at the 350 or 400 strike, the gap between 400 and the 910 would be this danger zone, where if the price landed anywhere in there, the 910s at expiration wouldn't print, and then the short 400 calls would get absolutely wrecked if we closed it, 700 a share or something. Now there is a bunch of green if you just don't hold this to expiration. So you would have to fumble pretty badly to screw that up, right? The only way that this would hurt me if we ran to 700 is if I didn't close it for a profit and just held to expiration. That would be dumb and bad. So feeling a little bit of regret there about attacking the tail too much. Like, I kept dollar cost averaging into this every time I would sell another covered call. I'm dollar cost averaging into these bad boys. Probably started out with like 10, then ended up with 15, 20, 25, 30, 35, 40. And that seemed reasonable at first because as I reasoned, I paid for them with the covered calls. So if they all expire worthless, really is it the end of the world? No, but it became more and more difficult to deal with the more I stacked. Like, this net negative theta position kept growing. So the 10-9-10s were really easy to deal with. That was, a quarter of this. But dollar cost averaging into these positions just kept stacking and stacking and stacking this long leverage. And so I am kind of annoyed with myself that I let myself get a little bit too sucked into the FOMO, and instead of stacking these, if I had been stacking poor man's covered calls, at least I would be growing my portfolio by however much I could collect on the short positions. Still wouldn't have turned this into a positive P&L for the year because there's nothing I can do. There's nothing that you can really do with long leverage to fix this. If you have a leveraged position, you need it to be green. There's just kind of no way around that. So, wouldn't have fixed it, but would have definitely cut losses maybe by 30%. I think that's pretty reasonable. Yeah. So, nothing, there's no way to fix it now. And it's not that I can call 250 the bottom, because who knows what Bitcoin's going to do. But it just seems like there's no way in hell that the bull market could be over with all of the money printing that they're going to have to do to compensate for all the wars that they want to fight. The stimmy checks that they're going to have to send out when AI starts putting people out of work. The deflation that AI is going to cause, the deflation that all of the other innovative technologies are going to create. They have to print enough money to hide that inflation, or hide the deflation. So it just seems impossible that we could be going down from here, but the market is not rational. So who knows if it will get worse before it gets better. Now, I don't know if that's just me revenge betting and wanting to continue to to just keep trying to roll these positions until it works. A little bit annoyed with myself in July that I didn't take advantage of that pump, because I missed doing it in November, and July was kind of like almost like a little booby prize, or like, hey, take this consolation prize. You fucked up in November and didn't exit all your leverage positions. Here's your second chance. But of course, I FOMO'd again and thought, okay, this is it. Bitcoin's going to 150, strategy's going to 1,000, and then really just didn't work out. So I'm a little bit on the fence right now. I do need to decide in the next couple of months, because because originally I was going to shit or get off the pot around the end of the year, maybe by end of Q1 2026. If we don't get a Bitcoin pump, I was just kind of assume that the bull market is over. But I'm considering extending that range through the midterms, just for the political part. Or maybe I should just recalibrate and jump into Tesla and get it over with before they make another big run. It's hilarious because this is the only account that has a positive P&L for the year, because half of this account was in, at some point I put like half of this account in Tesla. And then as Tesla performed and strategy didn't, I started selling off my Tesla positions to stack more strategy positions. And this account is basically like barely a little over break even for the year to date P&L, but it's the only account that's like in the green at all. All of the rest of them are some variation of red on red on red. So that's kind of, I mean, it's a good thing in this account, but it's still kind of annoying that that I didn't take November's bonanza and just slam half of it into Tesla. That would have been nice. I think Tesla was running at the same time. I think that's what caused me to Tesla last November. Yeah, Tesla last November was also up from 230 to 320. So I didn't really feel like I was buying Tesla at a discount here. So I think that's what justification I used, not to just ape into Tesla with half my strategy winnings. But man, would that have worked out well if I had taken all my strategy leverage off, even though Tesla was up 50%. It went up another 50% in a month. But then, of course, I would have probably just taken some of these profits and thrown it right back into strategy, and then both of the positions would have went to hell through the beginning of the year. So I don't know. I don't know how much. Well, certainly, really the important part probably wouldn't have even mattered about whether I got in or out of, rotated in or out of Tesla with strategy, but rotating in and out of the leverage. Like, you can stomach the volatility if you own shares, but when you own these bad boys and these bad boys, the volatility is catastrophic, pretty devastating. So didn't completely sink my battleship, but definitely, you definitely want to take a look at all of the decisions that you've made and ask yourself, did I lose money because I did the right thing and got unlucky, or it just hasn't, you haven't given yourself enough time to be right? Or did I lose money because of a bad trade or a bad decision, a bad thesis, bad execution, bad whatever? It's actually okay in the stock market to lose money if you executed your plan correctly and it was a good plan, right? Because it's just not always going to go up. But you should absolutely try to at least impartially review your thesis and your execution for error correction. And if you evaluate it and you're like, you know what, I was just early, then you can keep on keeping on with your same strategy. But if you realize that one of your assumptions was bad, or you made a mistake and executed poorly, then it's perfectly reasonable to to change your thesis or change what you do. What's up, Howard? Stop yapping and pump my bags, please. Yeah, I need an easy button I can just press. What's up, Buffalo? It's okay not to buy. Oh, to not buy the dip. You may regret it later. Way different than selling the bottom. Yeah, that's true. I've been stacking shares, paying margin with premium. Yeah, that's another way to think about it too, is, using intelligent margin, if you know how to, I guess, plan for the right amount of margin for your account size, and then sell just enough premium to pay the interest. That's interesting too. So, like, considering capitulation bottom signal. Exactly. That's the when you see that, like, people rotated out of strategy into Metaplanet or any of these other things, right? And now those same people want to rotate out of Metaplanet, but there's nothing to fucking rotate into. All of these investors with no long-term conviction. Like, what are you going to rotate into now? Everything sucks. I guess the miners. You could FOMO into the miners right now. Iron. Yeah. This looks like the perfect opportunity to FOMO into something that's up 700%. Almost a 10x. Who was it that was saying the other day? Actually, it was in there's a book called Trade the Trader. I think it was like a famous day trader. And I think that was one of the things that he did was kind of like, look, when you get something, if you believe in something and you win and you get a 10x, like, you kind of have to take something off the table at that point. Like, maybe all of it, or just keep some kind of little sliver. But this is getting close to that scenario. Could this go to 150? Sure. But this just seems like the perfect setup. Like, imagine if I panic sell all my strategy right now and just ape into fucking iron, and then and then it corrects to 36. That would just be perfect. Yeah, I don't have any idea. AI could carry this trade to 150 and beyond. I just have no idea. I think I got rid of all of my positions. Yeah, once this got over like 20-30 bucks a share, it was too expensive for this account. But yeah, that's a good point. Like, even when the perma bulls are capitulating, like, that does seem like a bottom signal. But I don't know. This doesn't seem painful enough to flush out all of the weakest hands. I hope we cling to 100 and go to 150 from here, but it just seems like it should hurt more. But yeah, I have been wondering. Well, I know for a fact that the Poorman's covered calls would have made more money than aping into the 910s. But I'm kind of like, should I just keep at it until it works, even if it takes another 2 years, or if I should just let these roll off, when these get to 90 days, and I'm ready to roll these out to, what would be April, May, June. I would have to decide whether I want to roll these out to June or later. At that point, if I should just take those profits and add the Poorman's covered calls and keep this position much smaller. So, not necessarily change the strategy, but make sure that it doesn't get so large of a position that I can't even maintain a positive theta account. I think that should have probably been a little bit of a signal to say, if you can't even maintain positive theta in an option selling account, you might have too much leverage. So that might be one guiding principle that I use to keep my leverage, my lottery tickets, at a reasonable level. Buffalo's over here trying to shame me into YOLOing. Let's see. I'm with you on the tail, but the best thing I ever did was buy the highest strike at the longest time at the bottom in 22. Yeah, and I think that's what a lot of people are trying to do, but it's not the bottom in 2022 anymore. So however long this bull market lasts, whether it's an extended cycle, whether it's a super cycle, at some point we know corrections are coming. So this could go to 150 and correct to 75, or it could go to 444 and correct back to I could correct back to 75 if it wants to, but at some point there's going to be a correction here. So when we're talking about leverage, you kind of have to make some decision of when you're going to de-lever. YOLO. Yeah. Yeah, so with that being said, I'm just trying to evaluate the performance and see if I can make some tweaks, not necessarily completely blowing up the whole strategy. I can't remember which one of those self-help books it was. It said, make decisions quickly and change them slowly. And I think the change them slowly part is important, because if you don't give something time enough to actually work, it could have been a good decision that you just gave up on too quickly. But I've been at this for, I think all of my long calls gone. Let's see here. What's my oldest position? Days open. I thought I had something. Okay, so I got rid of all my leaps that were 300 days old at some point. But I've basically been at this since around March of 2024. So a year and a half has been plugged into this strategy. And it absolutely worked like gangbusters in November. It worked modestly well in July when we had that summer pump where we tested all-time highs again. But it's been absolutely catastrophic between November and now, overall. So at some point, I kind of have to decide whether I'm just going to trust the number go up forever, Laura. And as long as my leverage positions are small enough that I can stomach the volatility through an entire bear market, I guess I could just keep plugging away. All right, we'll see. No huge major changes, but I do need to. Let's see. Nah, I think it's okay to change your attack, the tail strategy, maybe buy Tesla with the premium. Yeah, that's another good call. And I haven't talked about this in a while, but my original, when I realized that this was going to be an insanely profitable strategy, I did some math, and I call it reaching critical mass. Like once your account reaches a certain size and the amount of covered call premium that you collect is enough to add another position of something. It doesn't have to be the same stock, because it would be pretty hard to be able to add like a new cash secured put every single week on strategy. Like that's a pretty big ass account. My account's not that big. But, you know, I sold these 2 covered calls. I put $1,800 in my pocket yesterday. And what I could have done is gone to something like Wolf that's trading around that price and then sell a cash secured put for next week with the profits from the strategy covered calls, and then this is the put side, and then collect another $100. And in this way, your profits are not additive, right? So if you earn 1% a week, that's 52% a year. But if you take that 1% and then you earn another 1% on it, the calculation looks different. It would be 1.01, raise it to the 52nd power, because we'd be reinvesting our dividends weekly. This is basically just the formula for compound interest. So instead of a 52% return, you'd end up with a 67% return. If you collect premium and then invest all of the premium to collect more premium. That's the point. And I kind of flipped that model and started attacking the tail with the premiums, which, you know, if you can time it with November, you do great. But if you're still owning those positions and you get a correction from all-time highs down 50%, it don't work so well. That the compound interest don't work that way. And that's basically a variation of what I was mentioning. You know, adding poor man's covered calls instead of, right? Like I sell 9 covered calls, actually 21 covered calls. Let's just average it out at the 600. So let's just call it 20. $600 times 20. $12,000. Yeah, 12 grand would buy another covered call. And then instead of making 12 grand, I'd make 12 grand plus $600. And then in 2 to 3 weeks when I roll it, I'd only collect 6 grand. So would probably have to wait a full month to be able to add an additional covered call. But, you know, after a year of doing that, I would have 12 more covered calls. So I'd have 32 covered calls instead of 20. And now, you know, I would be collecting 50% more weekly premium is kind of the point. But yeah, it doesn't have to be strategy and then buy more strategy. It could be strategy and sell miners. It could be strategy and buy Tesla. It could be strategy and, well, it would be hard to do Tesla because Tesla's actually pretty expensive. But yeah, you could do Tesla and sell mine and buy miners, you know, whatever. As long as you're constantly adding percents on top of percents, then your profits will turn into an exponential return instead of just an additive return. So I kind of got away from that a bit and fell into this FOMO trap a little bit, I think. All right, let's make some trades. So wait, which account? Okay. Oh, these are in a different order now. Not ready to roll. These are pretty close, but they've only been on for a week. Once this goes under 3, that's That's like the perfect time. This one is ready to roll, even though they've only been on for 5 days. And I can roll to any strikes. Now you will notice here that my trade price is 357, and I'm putting these shares at risk for under my trade price. So on paper, that looks like I'm risking losing money, but who knows what my true cost basis is after selling a metric ass ton of covered calls here. Now this might not actually be worth rolling because I'm only going to be rolling it a week. So that's kind of annoying. But let me reshare without volume. So if I roll 1 week, can I double my credit? Rolling to approximately expected move would get me there, but I think I can even get that at the 310. Maybe I'll stick with the 305 so that I can keep my positions separate from these other ones that I have on. There we go. I think they're worth 340, and rolling to the 310 gets me exactly 340. So I'm doubling the premiums available on these positions. That's gonna give me shit. How much did that give me? 12 times 300, 3,600 bucks. Oh, now I gotta find my position. Just gonna call it Shares Plus. Yeah, with this one, I suppose I could roll down potentially, but I have to be careful with that. Now let's see, they're worth 250 plus 77 is 327. And here, these are 360. So if I split the difference, that's about 345. Yeah, I can't even roll these down for a credit right now. I need to let these cook. Somehow holding on to some positive theta, so that's nice. Yeah, I think I'm just going to let that chip away at my margin use a little bit. Instead of reinvesting that 3 grand, I'll just try to dig myself out of this margin hole that I dug myself into when I invested in Swan. Which reminds me, I need to actually check my Swan investment. I wonder if that's worth anything. All right, the IRA, Tesla. It's been on for 2 weeks. Tesla's up a bit, so I'm, this really isn't decaying very much, which is great, actually. So I'll probably let this cook another week because if I roll it now, it's going to be for a very, very tiny credit. So let's roll. Let's just see what it would look like if I rolled to the expected move. Oh, that's for a debit, so screw that. I mean, I guess I could roll it to, the only way to even roll it for a tiny credit would be, yeah, rolling it up 10 bucks. Seems like a waste of my time. So I'll let this cook for at least another week. Let the theta decay a good bit. Maybe I'll even hold it for a month. I don't mind letting this get down to like 2 weeks expiration. Okay. Not exactly ready to roll. This one is. But again, oh, so these is against shares. I can literally roll to any. any strike. So if I roll to the 300, shit, what was it worth? Only worth 372. So if I rolled oh. Yeah, I don't have to get that greedy with it. I can probably roll. Where's one standard deviation? One standard deviation is at 325. Halfway between 300 and 325. Let's go 310. That works. All right, that gives me a little bit of cash. Actually, I guess I can roll these. Nah. $600. What's that cheap miner? No. BITF? Yeah. So this is kind of what I was talking about. So I could take that $600 that I just collected, and then I could sell a cash secured put for next week. I'm just going to do it. I generally try not to do this in my Tasty Trade account because they're going to charge me $1, I believe, to open this contract. Yeah, commission and fees. So they're going to charge me $1 plus 12 cents. I don't know, maybe something related to the bid-ask spread. So I don't mind doing this in my... Why did that give me extra cash? That doesn't make any sense. I had 600. I sold this for 40, but it should be obligating $400 as collateral. Unless I grabbed the wrong position. No, this is a short put. Which I got paid almost $40. So that's almost 10% for 9 days. It's pretty good premium. And so maybe I'll just do that. The other danger, though, adding more positions and more positions and more positions is it takes more time to manage your account and allows you the more chances to make mistakes, right? If I come in here and check and I'm like, okay, I own 100 shares of BITF and I forget to sell a covered call, I'm just premium wasted, blah, blah, blah. But this is kind of what I meant. So I rolled this, collected $600, but then I reinvested those profits to make another $30. So I've amplified. I guess we're using amplification to describe strategies leverage now. So maybe I'll just try to work amplification into all my conversations. So I've basically amplified my my returns by reinvesting the profits and collecting more premiums. Is that everything? Yeah. I don't need to do anything else in that account. So here, this account not ready to roll. It's only been open for 2 days. Yeah, no buying power. Visa one. So the relatively aggressive 382.50s that I sold are doing just fine, unfortunately. It's Wednesday, half a trading week, and over half of this is gone. So let's see if I roll these down to the expected move again. I can collect $500. Yeah, I created these new accounts so that I could do the Misty challenge and all that stuff. But it's kind of annoying now that I have all of these positions in different accounts. Ugh, and Tasty Trade wants me to fill out a manual form to move all these positions. I just can't bring myself to do it. So I should be able to add like, the $500 that I collected here with the 2,000 from the other one and just be able to keep track of things easier. But at some point I may have to do that. Not ready to roll. Close, but not quite. So what to do with $500? As I said, I think I probably stacked too much leverage. So I'm not going to like exit these positions. I'll just keep them there. But, I'll just buy the dip with $500. One share, right? Boop. Oh, actually, I can get 2 shares. Bonus. There we go. Yeah, and maybe I'll stack enough shares to the point where if we do crash to $200 a share, maybe I'll sell the 40 shares and buy another Poorman's covered call and add some more leverage in that way. It's a little bit easier for me to justify adding this type of leverage than this type. All right, looks like I'll be assigned 100 shares of CLSK on Friday unless something crazy happens to the price. That will be fine. I got paid $75 to sell the 1750. That means that 1675 is my break even, which is basically right where we're trading at right now. This damn thing. I sold this one when Strive was trading under $1, I think. I sold the $1 call. So it looks like I'll have 100 shares called away. Got a few other cash secured puts. Let's see if iBit is ready to roll. Sold it for $1.36. Cutting this in half means around 68. So not quite ready to roll yet. All right, this one not quite ready, so I'll hold off on that one. Man, my debit spreads are getting pretty cheap for January. These will probably all just die a noble death, expire worthless. Holding out a little bit of hope for March, but no promises. Do I have 2? No, okay, so when this pumped to like 170, I sold another covered call. That expired worthless. Why is this saying this is up 15%? From what? Really? It's up 15% today? Okay. So let's check this out. This might be an opportunity for me to sell a covered call while it's up. I don't know if this is the market reacting to the SATA announcement. They're preferred. They are the second company to market with a preferred, a Bitcoin-backed preferred. So I could get a fill at a nickel. Robinhood sometimes will give you the benefit of the doubt and give you like 7 or 8 cents, depending on how the market maker wants to fill this. I traded my wife's account on Tasty Trade, and it actually let me trade in ticks of pennies. So the fact that I can't put in 0.08 here, I don't think. Yeah, I have to round it. That's kind of annoying. But sometimes Robinhood will just actually give you the better price. I'm tempted to do it just to see. And actually, this is on weekly premium. So that's kind of interesting. Getting a nickel doesn't sound like much, but when the damn thing is trading at 1.5, that's actually a 3% return for 2 days. So that's actually pretty ridiculous. But yeah, not really worth my time having to pay the bid-ask spread to just make $7. But I could go out to 45 days and get 10. No, that's kind of annoying. Let me go to, what's next week? What's 9 days? So I could get 10 at 150 for next week. Does that interest me at all? It's like 6-7% for 9 days. But if I get called away at 150, I would be selling them at a loss. What are my other positions? I can't believe I'm like agonizing over a position that's worth $100. This is hilarious. Hopefully it makes for good video. Yeah, I got 100 shares. I got 1 call, so I can place 1 more covered call. I bought this call and sold this put. So those are all the positions I still have remaining here. What did I buy this thing for? 10 cents? A nickel. Oh, wow. I'm up 50% on my 5 cents. Yeah, why not? I'll push this out to next week and sell. And I'm kind of interested to see if they're going to give me a better price. So I'm going to put in 10 because I have to and get a fill. And let's see if I get actually paid. So it did give me an extra buck, I think. Let's take a look. Yeah. So I said I would be willing to accept 10, but because the bid-ask spread was such that the market makers could actually get me 11, they actually gave me the extra $1. So that's very kind of Robinhood, I suppose. Or I could be pissed off at the fact that they're not offering me penny ticks to begin with. All right. So that's the, that position's worth what, $150, and I just got paid $11. 11 divided. Oops. Yeah, 11 divided by 150. Yeah, I got a 7% return for 9 days. If Strive runs to $10 a share, I lose out on all of that. So everything's a trade-off. What's up, Tyler? Seems like the SATA announcement, they are still outstanding. There are still outstanding warrants at 135 for what it's worth. So I don't even know what the warrants mean. Does that mean that that people have shares with cost basis at 135, like similar to a pipe but structured differently? And they could be dumping anywhere above 135, something like that. What? Shares, they can exercise a call at 135. Okay, so anything above 135, they're in the money. So they could exercise and take possession of their shares. They would be in profit, and then they could just turn around and dump them. Something like that. 750 million in potential raise at that price. Okay. I need to learn more about it. All right. I think that is it for the day. Final thoughts. Like, I'm just as bullish on Bitcoin and strategy as I was when I saw Quant Bros 1. There's been a lot of appreciation in the stock since then, but the long-term thesis, I think, has only gotten stronger. The preferreds are more accretive than the convertible bonds. And if the company is more efficient and it's cheaper than it was at this time just 12 months ago, I still feel like I have to be acquiring as much as I possibly can. But yeah, I think that's all I got.